This is a trade that I'm going to be reviewing. I took this trade today on Wednesday, the 12th of November. And as you can see, I did record the final portion of the trade. However, in my haste to get the execution video going, I actually forgot to do the audio. And right here, this is fast forwarded like times 25 speeds. We can speed up even more. But I did a very lengthy explanation of the trade and all the executions and the logic behind it. But yeah, unfortunately, it did not record the audio. So I'm going to go through this again briefly. I'm going to show the executions real quick first, and that will be on here um, on this chart, and give a brief explanation. Then we're going to jump across to this clean chart over here. I'm going to break down exactly what the model was and how I was able to anticipate it, and then finally go over what I did well. And I've also got the game plan I put in the morning. I can play that as a recording as well. I might add that to the end of the video so you can hear what my thought process was as I was preparing to take the trade. So here is the chart of the execution. This is a fresh Top Step challenge account, just 2 days old. And what you can see here is my initial entry that I wanted to take. I wanted to see a drop below these short-term lows. We never got that, and we were leaving smooth 5-minute lows. So I didn't really want to take a trade at that point. Eventually, I did get a position going after I took out a 5-minute low and caught the anticipated move. My final TP was not quite hit. However, I trailed my stop very nicely to the correct locations and just got stopped out of my runner there. Really happy with my trade execution overall, but I'm going to quickly walk you through the what this trade actually was, and then come back to this page afterwards and go through a bit more detail. But the trade was based off of a market maker model framework. I identified second stage on the 1 hour chart, and then I identified second stage on the 5-minute, and then on the 1-minute chart, I identified yet again second stage. So that's why I've got a second stage of second stage of second stage. Basically, second stage, you're anticipating a shallow retracement and then a very extended move. And when you have a 3 times fractal, that makes it exponential essentially. Didn't quite get to my target. I was hoping it'd move a bit faster than this. However, it still did get quite a nice move, and I'm really happy with how it executed. As you can see, I did take a stop out initially. I tried buying just on a 15-second drop down below a short-term low, and it's dropped a little bit further. Took me out, but then it also reacted from a 5-minute low and then got this manipulation closure, which is a very key signature that I'll show you later. And as soon as we got that, I really trusted it. And you can see I added another 3 contracts there. So I had a total of 18 at that point, I think. First TP up here, as you can see, we consolidated a fair bit of time before getting going, especially if I'm looking to try and scalp. But I was able to hold through this entire consolidation, trusting that my risk was managed appropriately, and I was quite confident on the trade. Eventually, we get this run up, want to speed through this, the 80s at this point. We didn't get that initially. It started showing that some signs of weakness, and so I figured, well, there's no point having my stop all the way down here and not taking a single partial, especially when I was up significantly. And as you can see, this template is called base hits. It's kind of the theme at the moment is I should be taking more base hits. So I figured I'd better take something off. I wanted to take 8 off here. I took 4 off a bit lower. Was going to take another 4 off up here, but I trailed the stop up below what I thought was a 15 seconds intermediate term low. That gets taken out, and then we run up towards TP1. So at this point, I just take off 2 there because I'd already taken off the majority of what I wanted to down here. And I had 8 remaining. I wanted speed through the 800s. I was going to monitor how we approached. If we hit the 800s and rejected sharply lower, then I'd be looking to potentially take another partial. But we got a beautiful blast up through. So I took a partial at 809. So up here, which is 10 points past the 800s. Spend some time up there, eventually breaks down aggressively. Stop loss trails below the lower 5 minutes fair value gap. That was the trade in general. I'm going to quickly explain what it looks like on the hourly time frame and hide all executions so we can actually see the chart. So the trade that I took was right here and running up in towards this high. So you can see this is a really sharp high, and this is what I call an impulse high. Very, very high probability targets and also high probability to reject price. Now, what I saw on the charts was one that the daily time frame was showing strength. Although Nasdaq is lagging behind the other indices a bit, I still saw that strength and then was looking for why we should continue up into these obvious targets. Now, I identified a first stage of a market maker model framework, which is a intermediate term low, where we short term low to the left, and then an intermediate term low, and then it breaks this high. As soon as price breaks this high right here, this means that first stage has now played out, and I'm looking for a second stage of a market maker model, because there's always at least two stages of a market maker model. We then have the sell off, and it goes quite deep, but it doesn't take out this low, continues high, so this becomes second stage. Usually for second stage, you'd anticipate a very shallow retracement and then a big move. So when it does retrace this deep, that can just indicate that we're actually likely to have a reversal at some point. As you can see, we kind of did over here, and it may not be as bullish as you thought, but it does still continue high. So if I drop down to the low time frame, you'll be able to recognize that same area with first stage, putting in the intermediate term low, and now we're expecting second stage here. So this box right here becomes second stage. If this is a market maker model, if this is second stage, that can be a fractal market maker model. So we have a original consolidation. We have first stage here with intermediate term high. We then have second stage here with our IFUD selling off to make the low. I'll just leave that there for now. After starting reversal, you want to see first stage aligning with the second stage on the left side. So we have first stage here with a short-term low, intermediate, short-term, and then distributes in towards the highs, falls short of the highs, and drops back down for second stage. Second stage aligning with first stage. So for second stage, we're looking for a partial entry into fair value gap. You can kind of see that here if we draw out from this buy side delivery to sell sides, partial entry into a fair value gap, and then we start hitting high. Now, what you'll notice here is how we are within this high time frame market maker model framework with first stage, second stage, but within second stage, we have the exact same framework. We have a smart reversal, a first stage, and a second stage. Now, this entire trade was based off of the facts that we have this fractal, and then I zoomed into this fractal, and what do we see? Well, it kind of looks like a market maker model. Dropping down into the 1 minute time frame, we can zoom into that exact same area, and you'll start seeing why I took the trade. Original consolidation, first stage, second stage, smart money reversal, first stage, second stage. And that's why I wrote out second stage of second stage, second stage of second stage of second stage. So a 3 times second stage fractal. And so I anticipated we should have a very shallow drop into a fair value gap. Price should remain really strong and we should get an extended move that isn't based off of this time frame. It's actually based off of the 15-minute/1 hour time frame. So that is the logic behind taking this trade. I will hide these drawings real quick, jump to the 5-minute chart. I'm going to show you why I didn't jump in right away over here. I really wanted to buy just below this low. I didn't, however, because we were leaving smooth lows on the 5 minutes. But if I jump to the 5 minutes and head back over to where we are, so on the 5-minute charts, this is that same area. That's the 1 a.m. low just here. And I was looking for us to drop down below that low because I only got to the charts at this point. But you can see that we're making higher lows. Every single low is higher. I don't want to buy a market when every single 5-minute low is just being made higher. I need to see at least one take out a low first. So although I had a buy entry limit down here, to buy, I actually waited and I was feeling mad FOMO. You'll hear in the recording of the game plan, feeling a bit of FOMO because I was like, this looks really good. It's just going to rip. Eventually we get this drop down and take out a 5-minute candle low. So that's where I was like, cool, that is all the confirmation I need. I'm able to get in at this point, and then got that signature and caught the long. So I'll jump over here real quick and I'll be able to show some screenshots I took during the execution since I don't have a recording. But as you can see, this is where I wanted to get in with that limit buy down below those smooth lows. And then eventually I took a small loss by trying to buy on this initial drop here. It then drops below that 5-minute low. I jumped in long and you can see that initially my entry was, hold up, if we go to the next slide, you'll be able to see. So initially got long, got stopped out instantly, got long again at the lows, and then as we started to rally away, I added to the position. So that's why you can see my average is fairly high. It's because I initially put some on here. We then got this manipulation closure, which I'll show you in a minute. And as we started ripping away, I was very confident. And so I added another 5 at this point up here. And that's why you see a partial stop trail for 5. Just wanting to keep my original stop loss in place down here. So I was only risking roughly 300, a bit less than $300, probably $280 on this trade because partially would have stopped out here. But again, that nice pump, I was very confident in the trade. See, my initial TP that I just set was at 78.75, base set being below the 80s. But once we got this manipulation closure and this really high, I was then getting confidence in the trade. It was showing me exactly what I needed to see. So I figured there's no point taking a partial here. I take it higher up. And the reason why I chose the 90s, which you can see here, take profit at 789. The reason I chose that was based on any time frame you want, but the midpoint between the liquidity pool that we're targeting and the liquidity pool we had just hit. So as I'm taking this trade, we are hitting the previous day high. An observation that I've had is when we are hitting a point of interest, such as previous day high, and you have another liquidity pool further, a point that there can be a bit of resistance is at that midpoint. So if we drag that out, you can see that line in the middle, that's at 796.25. And so I wanted to take something off at around that area, just in case we did get a bit of reaction there. And as you can see, we actually failed to close above it and then sold back off into the range. So that's why I put it a TP at 90, because 96 was only a few points past that. 90 is an even number, and that made sense to you. Next slide, beginning to put a lot of annotations on, but this is actually, you can see there's a big gap here. This is at 1:48, this is at 2:44, so this is almost an hour later. But you can see how it played out, taking those partials just below the TP1 as it began to show some resistance around there. Taking that 2 off there, taking 2 as it ran up towards my target, and then trailing the stop up to that low, and then that is the final slide. So this is I'll jump over to the clean chart in a second. I'll just finish explaining here and then we can go over the clean chart. The whole reason I'm doing this because it's giving me a whole bunch of reps. The recording I made last night, that didn't have the audio. That was a rep. That was a repetition of going through my trade plan, explaining my thought process, and that's going to make me a better trader. Now they get to do it again and again and again, and it's just compounding. And so I'm gaining a lot of experience just from this one trade execution. Recognize that, okay, I've got this first stage, second stage. I'm really liking this. I can now see a market maker model over here as well. And then we have, I can even zoom in a bit. So first stage, second stage, getting that original consolidation, first stage, second stage, smart reversal, first stage, second stage, very obvious targets, looking really strong. We've taken out lows there. It looks like it wants to push. Then on the 15 minutes, you can see that this is the second stage that we had listed out here. Up here, we've got the same thing. So, but now it's the zoomed in spinal reversal first stage, and then second stage of second stage. So that's where we're expecting a larger move. Then zooming into this section over here, this is where it gets really exciting. You have second stage of second stage, but then we have within that another second stage. So we've got a 3 times fractal spinal reversal, First stage isn't the cleanest, and I say that because there isn't much of a short-term low. I guess you could say that's a short-term low, but it did have a nice pullback and then distribute up towards these highs. So I did trust that that should be first stage, and we should get an institutional order flow entry drill here. So just a partial entry into fair value gap. Now you can see on the 5 minutes on the right, you can see these higher lows, and that's what made me uncomfortable to just buy here, although I really wanted to, and you'll hear that in the execution, and not the execution, but in the game plan recording. Finally, let's jump over to a clean chart. What is a market maker model? Well, I've explained it before. There are plenty of videos on YouTube about it, but you have a consolidation. Actually, I'll do it like this. You have a first stage of the market maker model. You can call it distribution on the way down or accumulation on the way up, but really it doesn't matter because you're distributing towards lows if you're offloading position, or you're accumulating if you're going down for the purpose of going back up. But you have a intermediate term high that puts in first stage of the market maker model. You then are looking for a partial entry into fair value gap or just some really weak order flow. The order flow should be very weak at this point. Makes a reversal, you can have a shift of some kind. You want to put in a intermediate term low for first stage. You then want a partial entry into fair value gap, and then you want to complete the market maker model like that. And you're just anticipating that this point right here is the best place to take a trade, most likely, if you're in a strong market, and you're expecting a very shallow retracement for a lot of speed and extension. As I mentioned, we had some fractals going on, and what those fractals are is this box right here. We have, actually I can just do this. So this exact fractal that we just did, should have made that a bit thicker, but that is essentially, there we go. So this is that essentially. We have a fractal market maker model in second stage. You also have the exact same thing over here, but we're focusing on this one. And if you zoom into that, you can then do the exact same thing with this second stage. And then with that, you zoom in even more. And that's where you get those fractal models. We don't have to take out necessarily the original consolidation. Now you can also use it as an expansion framework, but that's the general idea. Daily chart over here, this tells you why we were bullish. Recently has this pullback. We're extremely bullish at all-time highs, and there was a bit of like just getting a bit of a feel from social media. There's a bit of bearish market sentiment. Everyone's talking about how gold just had the biggest pullback ever, and a few other things. And that was going into the weekend as well. So with this big down closing week, Friday drops down. And what was really cool to see is how we have this daily order block down here that we never touched. So this candle never managed to touch it. It's this daily CSD. And it falls just short of it and then rallies. So this becomes a daily impulse low. Impulse lows, as I mentioned, are very likely to get raided and make some really nice places to get soup entries from. And so when we dropped down into that order block and got this beautiful reaction on Friday, I was thinking, okay, this looks like it could actually be a nice long. Usually when we print a really long wick like this on Friday, I see that as us enticing longs going into the weekend, trying to get a bullish sentiment and make people buy essentially. And a lot of the time, the very next day on Monday would just absolutely overlap it. However, this case, it didn't happen. And the reason why I was able to trust that is because the time that this wick formed. This wick formed in the last portion of the day. As you can see at 12, at midday, we made the low and then we rallied aggressively. When we reverse at the final portion of a candle on whatever time frame, that's what I call as my signature the last second wick, and that's a lot of the time will indicate a actual true rejection. If we were to have made the low at, let's say, 7 a.m. and then just traded higher all day, very high resistance, and given plenty of time for everyone to see a long wick forming, then I'd anticipate us to take it out. But the fact that it formed in the last portion of the candle suggested that it was actually going to be a big move. and it could actually hold a bit longer. The other thing to note is how the reversal happened at exactly 12. A lot of the time when there is going to be a more significant reversal, it will happen at midday. It's another thing, just to catch traders off guard during the lunch hour, I suppose. That's the only thing I can think of. But that's why we're bullish. Now jumping over here to this time frame. So I mentioned I could see this first stage of the market maker model. I actually jump over to the 15 minutes. So I can see the first stage of the market maker model, and I was anticipating a second stage. With the original consolidation, there are quite a few different ways to identify them. They don't necessarily have to look like one big prolonged consolidation. Sometimes it can just be equal hourly opening prices. Sometimes it can be a manipulation closure or just a few signatures in price. But the main thing is just identifying there is a genesis to the market maker model somewhere, and I'd just say this new week opening gap would be what you'd use. We have a clear intermediate term low that takes out that low and runs higher. That's my first stage confirmed. Looking for that second stage. Really deep pullback, as I mentioned, and then starts reversing back up. And you can kind of see a very clear market maker model. You see a textbook consolidation. You can see a textbook intermediate term high that's higher than this high. You can then see a textbook a partial entry into fair value gap, and that's you can just see how we run above the short-term high and reject it aggressively. And then from there, up on the upper side of the curve, you have a short-term low, intermediate term low. So that's our second stage there. And then we've got first stage on this side. We have the smart money reversal down here, as well as some nice narrative with this long work enticing shorts. Smooth highs above, that really obvious buy side pull sitting up here as well. That was the target. And on top of that, we can then anticipate second stage because we have a spot reversal, first stage, looking for second stage. And at this point, it had already proved itself. We had had a partial drop below this impulse low, 15-minute impulse low had been taken out at 23.30, and then we started rallying higher. So at this point, I can drop down into this box right here and look for that lower time frame market maker model, which I'll do right here. And I'll replay the chart real quick just that we can, this is a bit easier. And one other thing I can add is the hourly open. So we have a nice consolidation up here. We then begin selling off. We have first stage of the market maker model here, and then second stage that makes the low. Now on the right side of the curve, as I mentioned, heading back up. It doesn't look as clean as the high time frames because the lower you get, it starts getting more and more subjective. And if you were to, let's say, zoom into this area right here, you would be able to find the exact same fractal, a consolidation, a first stage, a second stage, smart reversal, lower SPY, first stage, second stage, distribution to the highs. But it starts getting, more subjective and a bit less clear to see. But at this point, we've got a area to anticipate second stage to form. So we know that we've now got those two higher time frames are in alignment, and we are now in this area up here. We know that we've had first stage, and that second stage should be a very shallow retracement. So below us, we had a few fair value gaps. We have a 5-minute fair value gap, I believe, here somewhere. I think that's our 5-minute fair value gap, something like that. Let's just say that. And then there's a lower fair value gap down here as well. Now, do we anticipate it to reach the lower fair value gap if we are in second stage? Well, no, because it should remain really strong. So I trusted that stop loss could easily go just below that and it should be very safe. So that's why you see on my screenshots that I was looking to buy down here with a stop just below this gap. Now, it never did that. It was leaving those smooth lows. So waited for a drop below a 5-minute low. If I bring up the 5-minute chart, we can see that a bit more clearly. If this sounds repetitive, it is, and it's meant to be. It's because every repetition gives me more experience. So we're leaving these smooth lows. We actually did print a very long wick at on this candle, raided that out in the next candle, so that becomes quite a nice raid of a sell side pull. Slowly begins creeping higher, eventually printing a long wick, enticing shorts, and then running up. But we still hadn't taken out a 5-minute low until this candle right here. So as soon as we get this candle, it drops below a 5-minute low. That's where I was buying. And then we get this manipulation closure. So this was the thing that gave me the confidence. This, a lot of the time, will represent a original consolidation, or that we have just had a manipulative move and we're going to extend in the other way. So a lot of the time, this could indicate that we're planning to come back to this area, but not before we've had a move in the opposing direction. So when I see a signature like this, I anticipate that we could come back here, but most importantly, I expect that we're likely to extend away. And how you confirm it is when a closure on a candle closes beyond what would be acceptable for order flow in that direction, but then it continues in that direction anyway. So with this particular use case, we have a long wick. Long wicks, the midpoint, should act as support when price is bullish or resistance when we're bearish. When we close below the midpoint of a wick, a lot of the time they will indicate that price is actually reversing, unless it's a manipulation closure, which is where it closes below, but the very next candle instantly rejects straight back up the other way. So when I saw that, the invalidation becomes a stop loss below that, the manipulation closure. And that's why I added to the trade in this range with 5 contracts and then another 3 up here as well. And call that run higher. We did eventually end up, when we turned, obviously, came back down. So that was the entry and how I got in. And then we had the liquidity midpoint, as I mentioned, was at 76.75, I think, or 76.25. But that's the liquidity midpoint. I wanted to take a partial somewhere around this area. Just below that, we had the 90s, which is an even number. So that's why I took the partial at 89, which is just below. We then blast in towards the highs, getting really close to our drawing liquidity. That's that hourly impulse high. So as we blasted up through these highs and got 10 points past the 800s, that was a great place to take something off. What ends up happening is we drop all the way back down. We take out this previous hourly candle low at 3 a.m. and then have this kind of high resistance run up into towards the highs, making, I believe this is the high of day. It's 2 past 5. What are we up to now? So this is the clean charts example, and I just walked you through that. I will actually now walk you through the exact same model on gold from this week even, and I even caught them. I believe the executions are on MT5, but I made a video on this already, or at least on one of them. But in this particular case, what we can see is a original consolidation. You can see that by the fact we have one relative equal lows, but also the fact that we have that same manipulation closure signature while failing to take out the lows, and then we reverse back up, also on the 4-hour chart. So original consolidation, we then have first stage in here. So this becomes first stage, we have a short-term low, and then a intermediate term low below that, and then a short-term low to the right, and breaks the high. As soon as we break the high right here, first stage has officially played out, and now we're looking for second stage, which we're looking for a retracement and then a rally. And similar to the other example, this retracement was fairly deep. But that gives us the opportunity, jump to the 15-minute chart, that gives us the opportunity to look for that same fractal. So if we've got first stage, plays out here, we're now looking for a retracement for second stage. We leave smooth highs, we sell off into the range, put in a reversal. This becomes our smart money reversal for second stage, and now we need to find first stage and second stage of that model up here. So going back to this screenshot, we've had this side of the curve play out like that. In fact, I can even light it up. And now we're looking for the intermediate term low and then the partial entry into a gap and then rally. Right here, if we zoom in a bit more, you can see that we have this long wick. The next candle starts to rally, and then we wick down aggressively at 2200, rating out this low. That becomes our intermediate term low, and then it continues high. So we've had first stage playouts. Now we're looking for second stage, which should just be a shallow drop into a gap or just a very shallow retracement before a large move. And you can see here we actually got a really nice large move. So I'll drop first the 5-minute chart and the 1 minute. But on the 5-minute chart, here's that same fractal. There's our intermediate term low. We then consolidate for a long time. And what you'll notice on the 5-minute is the fact that we've got these big up closing ranges. So really big, strong looking closures, which I see as enticing people to buy. Very long wicks below. People see that as typically, traders will see that as a bullish rejection in quotation marks. And they'll think that this is a great support area to buy it. Eventually it sells off and rallies. And then on the 1 minute, that's where you can get your entries. Where are we? I believe I would have made a video from this day. So if you look for a video from Thursday the 6th, you'll see my executions on that day most likely. But in this area consolidating, if I'm anticipating a shallow retracement for second stage, we should not take out the intermediate term low, which I've identified as being this 2200 low. Then what are my options? Well, I just need to buy below sell sides and anticipate we shouldn't come down here. We have a hourly candle low here, 2300 low. Okay, what's below that? Well, we've got a really obvious impulse low that ran up to make this high. That becomes a very strong point of interest to me. And then below that, another impulse low. And below that's the most discount impulse low. I jumped in at this low actually, just as we're hitting that. And then we ultimately came right to that tick and then got a beautiful reaction back up. So that's the first example. And then I'll quickly do the other one because there were two. They're all over the place right now. But the other one that stood out was this one here. So that one we just went over was right here. The next one is we have second stage play out and then a deep pullback into the range. So just like a reversal back down, but then we start showing bullish order flow again. We've got clear trap stops up there and we start putting in another framework. So what do we have? We have a reversal, we have a low risk buy, we have a short-term low, an intermediate term low, and then that after that intermediate term low, we run high and make a new high. Then, sorry, I did that wrong. Never mind. I need to go on a lower time frame, that's what it is. So 15 minutes. On the lower time frame, we have that reversal, a low risk buy. We then put in a short-term low, and then an intermediate term low that takes out that low, and then it runs and breaks the high. Now, the reason why I can say this and I can not get thrown off by it's intermediate term low here, it's because one, there was you could see this as the first stage of a market making model, and then this is second stage here, which does play out. Partial entry into a gap makes a new high. But this also becomes the same thing, the same fractal, because we did not hit the draw. We then drop back down below this low and then break the high again. So at this point, this becomes a short-term low. This becomes an intermediate term low. And then once we break this high, first stage has now officially played out. So now we can look for second stage. The thing that threw me off a little bit about this was the fact that we had already hit external range liquidity as well. But as I mentioned, we always will have that second stage of the market maker buy model. We then pull back into the range, and this becomes where we're looking for second stage. Now on the hourly time frame, this is a very long wick. We then consolidate below it, leaving smooth highs as well, all the way into Friday's close. This is a framework that I call the long wick plus no gap, the antithesis to long wick plus gap. But long wick with no gap is when you have a long wick like that, and then we fail to displace lower. That indicates that we are likely enticing people to get short. Their stops are going to be at that high, and we could anticipate a bit of a short squeeze. Now, if we then look at this, we've also got a long wick below us. I initially wanted to buy below that. We never actually took that out, but I was able to still get involved, and I'll show you how in a second. But you can see that we clearly took out some significant sell side down here with this raid, and then this very next candle here also raided out the previous hourly candle low. So a really nice rejection and ripped high. So I trusted that we shouldn't take out this low. I was bullish up to these highs for reasons I explained in the previous video as well, and so I'm not going to go over that now. But then on the low time frame, you can see 1800 opens up, gets this nice rally in towards these highs, trips in any buyers up here, and then starts consolidating sideways. On the 1 minute time frame, here's that weekly open right there. We just clicked below short-term low, then rallied, but now we can start getting that fractal. So as I mentioned, this is second stage. This fractal right here is second stage of this high time frame fractal. It's smart and reversal, low risk buy. First stage, second stage is here. If we zoom in, now we just need to identify the market maker model here. If this is the original consolidation, this is the reversal. We then have a short-term low, a intermediate term low, short-term low to the right, it breaks the high. As soon as we've broken this high, first stage has now played out, which is the equivalent of us breaking the high over here. First stage is played out, we're now looking for second stage. First stage is played out, we're now looking for second stage. Characteristics of second stage is that the market should remain strong, should be a partial entry into a gap, and that's exactly what we get. We have this big displacement, but do we pull deep back into this range? No, just a partial drop below this short-term low. We then engineer another low. We raid that out really nicely, but staying quite strong up in this area. And then eventually that gets this nice push. And because this is a fractal second stage, we can anticipate that it should likely have quite a large move. We're expecting that it should at least break this high. And that would be absolutely minimum requirement. And so you can capture that really nice movement up and towards the highs. I won't get into now, but when you can anticipate when we should have a fast move versus a slow move, that helps you identify what entries will actually work. So should I be using one entry technique or should I use a different one? Because different entries will not work in some situations. But when you have a fast moving market, multiple second stages of the market making model aligning, you can anticipate your very fractal fast entry models to play out. And for me, this particular one was a impulse rejection failure. It's only works in second stage of market maker model. Otherwise, it's got a very high win rate. Otherwise, it's a low win rate. But if I can identify all of these fractals, and then I can identify my entry technique, I can trust that it should work, and I get really tight entries. And basically what this is we have a intermediate term low, a high put on the low time frame down here. We then sell off, reversal, rallies back up, breaks the high. At this point, if we're bearish, this should reject lower. It begins to reject lower, but then fails to do so, closes back above that high on that candle, and that becomes the entry. And the stop loss goes below that failure swing that failed to reject from this high. And then at this point, if you're going to target external, becomes easily a big trade, and then obviously you can hold further. I actually closed out the trade right here, and that was based off of the liquidity midpoint. So if I measure out this buy side here up to the high, I measured out the midpoint, which is actually a little bit higher, and yeah, took it off there. But I'm still working on this model and this framework, but I can see how powerful it could be when I identify it real time and am able to have a standard operating procedure with how I execute on it. And since we're here, I might as well show even more fractal. So obviously this is second stage of second stage. But within the second stage, we then get another fractal market maker model. And what that looks like is if we zoom in a bit up to this area. So as I mentioned, this is where I found my entry. If I drop to the 15-second chart, we zoom in. Well, this pullback has the exact same framework. We have a consolidation, a short-term high, an intermediate-term high. It breaks the low. That becomes first stage. We then have a partial entry, like a very small spike, and then it sells off. So this is now second stage, sells off, and after a second stage often comes the reversal. So we have this reversal down here. After reversal, it rallies, makes a short-term low, breaks the high, takes out this low, so putting in an intermediate term low for first stage, and then runs high and breaks this high. So this is us confirming that we've just put in first stage, sorry, and now we're looking for second stage. So second stage, you're looking for a partial entry into a gap, and then for it to go from there. And as you can see, we have a gap here, I suppose you could say, partial entry, and then it rips. And this is where, like, if you had enough data, like sure you could drop down lower and lower timeframes to get more and more fractal. But this is how you can anticipate, okay, well, this should be an entry. We shouldn't go very deep into this range. So stop loss should be able to go down there. And oh, that's right, we're targeting the highs up here. Obviously, I didn't execute quite like that, but theoretically that's what's possible. And then you can go, oh, I'm going to go down to the 5-second chart or the 1-second chart. And then that's where, it just starts getting a bit hard to tell and too subjective. Because sure, you could say, oh yeah, I can see that there's a reversal in the first stage and then a second stage, but you can't really see that. It's becoming really subjective at that point, but it's still cool to see the fractal nature of the market. And what I'm so happy about with the trade I took on NASDAQ yesterday or last night, it's just the fact that it's able to anticipate it and trade it real time. Finally, I will play through my game plan recording, which I do on voice memos. I've got it on skip silence and 2x speed, so it should be nice and fast, and you can compare and contrast my game plan versus my executions. Game plan for the London session on Wednesday, the 12th of November. Looking at the indices currently, and we are actually looking incredibly bullish. As expected, or as I observed, a really, really nice reaction from that CSD from Friday, the 17th of October. Souped a daily impulse low into that CSD, which was untapped. Got a beautiful reaction on Friday last week, closing with a really long wick on a Friday. However, this was a last-second wick. It's with the reversal around midday, around 12, meaning that it was in the last kind of 4 hours of the day that we really reversed up really hard. Gapping up at the weekly open, having a big up close day on Monday, Tuesday, really small range to just tap the previous day high, close with a wick. But then today, just really small range today so far. Hasn't taken the previous day high, but it has been trading higher. We have some move highs above us as well as a daily civvy. And across the board, we're looking very strong. If we look at RCY and YM. RCY is actually looking kind of weak at the moment. It has been selling off a lot weaker than all the others and failing to climb very much. However, it's got heaps of smooth highs above, also some smooth lows below, just not worth touching at the moment. YM gunning towards its all-time high. It is almost there as well. It has just got above 48K, and obviously going 400 points above that will put us nicely up above that previous week high. So it really looks like it wants that really soon. He is looking really strong and already just about to take out the previous week high. And NASDAQ lagging behind a bit, but it does look like it should pick up a bit. If we look at the 4-hour chart just briefly, we can see that we put in the 10 a.m. candle on Monday, worked down really aggressively, took out the 2 a.m. low, then worked all the way back up. We then created another low at 10 a.m. on Tuesday that came really close to that other low, which is that intermediate term low, but did not take it out. And now we're pushing back up towards the highs. And I'll talk about this in a second on the 1-hour chart, which I'll drop down to immediately. It's kind of looking like a market maker model. And I say that because we've got the Sunday open. It opens and rallies high. From there, we then put in a very obvious intermediate term low with that 4-hour candle that works down below that 2 a.m. low. Displaced this high super hard, putting in that first stage. As soon as we break that high, it becomes first stage played out. After that, we're looking for second stage. Now, for second stage, in this particular scenario, we've had an incredibly deep pullback. That was the really big lows that we made with Tuesday 10 a.m. candle on 4-hour. dropping really close to that low, but not taking it out. And then we've started trading back higher. So it's basically a second stage of the market maker model. So we should break out the previous day high, which we are getting very near at the moment. However, it was just a really deep pullback. So that could indicate that we are planning on coming down here at some point in the future, potentially after getting into the daily civvy, selling off to reaccumulate below the Monday and Tuesday low potentially. But in the meantime, we've got this market maker model playing out. And at the moment, I can see that we have this second stage. And within the second stage, obviously, that is a fractal market maker buy model. So dropping down once again, this whole time, ES has been ripping. And so it's a lot stronger than NASDAQ. So I'm actually just going to only focus on NASDAQ right now. I really hope it does give me my entry. It's looking almost too strong. I might just have to get a close proximity entry. I don't know. Anyway, so as I mentioned, we've got that fractal market maker buy model, but within that, we can see the smart money reversal at yesterday's Tuesday low. We have first stage, which was essentially the PM consolidation into the 1800 open overnight, which we actually consolidated a whole bunch as well. So really tight consolidation, but you could call that an intermediate term low put in as well. We then just place higher quite aggressively, getting quite extended. We pull back, failed to get into the lower fair value gap, so leaving a portion of that unfilled, and then started hitting higher. So we've had this one reversal, we've had first stage overnight, and now we're getting second stage. But the thing is with the second stage, this is second stage of second stage. Zooming in yet more, we have the high at 21.15 tonight. That has a little consolidation. This becomes another fractal market maker buy model, but this is now a 3 times fractal of the market maker buy model. And I really want to get in because it didn't drop into the fair value gap I wanted to buy, which is a 15-minute busy just below the 1 a.m. low. I wanted to have it hit that, and then I was going to get long. But you can see this fund reversal down at 23.39. First stage of the market maker model put in just after midnight is 23 past. Rally is higher, getting quite close to external, but then consolidating and just getting that IOFED, that partial entry into the fair value gap, expecting us to remain really strong. That's why I'm kind of having FOMO right now, because it shouldn't drop deep into the range, and it hasn't. And I didn't want to take the long simply because we weren't taking any 5-minute lows. But now it's looking incredibly strong, and if it does take off, this could have easily a 63-point run up to the 1 hour high up at 25,822.25. So obviously I don't want to just jump in this without, I don't know, it just looks like it's going to rip. It really does. It might try and get a fractal really low time frame entry, maybe on the 15-second chart. Just wait for a sweep of a short-term low and just buy that. But yeah, essentially looking incredibly strong. Got on record that I saw it before it happened. So let's see, it is 129 currently, and it looks like it could easily just accelerate from here. But yeah, we'll have to see if we can get a drop down at least to the 50s would be ideal. But honestly, it looks like it's just going to rip. So yeah, we'll see if I can get involved somehow. If I can find a tight entry, if we get rate out a short-term low, get a nice reaction from that, I just buy that and look for that. Especially if we get a new 15-minute candle opening in a second, looking for that bottom wick and just buying that would be ideal.